And firstly, our viewers would like to know what is the proposal of the government for salaried taxpayer. So far, the provisions are complex and difficult for common middle class taxpayers to understand. What specific steps have been taken to simplify its language and structure to make it more accessible to the common taxpayer?
Pratibha, the process of simplification of the Act focuses on enhancing clarity and ensuring ease of reading. The parts on salary and house property, which mostly concerns our middle class taxpayers, have specifically been designed for this purpose so that common taxpayer can read them and file his own return of income. So the first step towards forming these chapters was taking into account the grievances that are with our central processing center. We have taken note of the grievances with CPC for last 5 years. We had a subcommittee of 5 officers of the department for this purpose. The subcommittee took help of CPC at Bengaluru and collected last 5 years grievances for ITR 1 and 2 that is filed by the salaried taxpayers. Also the feedback of stakeholder consultation process, and with that we designed these 2 chapters.
Ma'am, is there anything new in the chapter related to salary income?
First of all, the restructuring has significantly reduced the length of the salary part, more than by 22%. All existing provisos and explanations across various sections like rest of the Act have been now integrated in the main provision. There are certain redundant provisos, like one proviso is there specifically only for the year 2001. So such redundant provisos have also been removed. All provisions related to salary are now brought under the part so that the taxpayer does not have to refer to different chapters for calculating his salary income. Like we have allowances in section 10. This is part of salary income, but the heading is under section chapter 3. So now that has been brought under the salary part. Now the part is simple to read, clarifying all crucial terminology like perquisite, profits in lieu of salary. Separate sections have been made for perquisites and profits in lieu of salary. Deductions are put under one single section. The legal and technical jargons have now been minimized, and provisions like perquisites have been rewritten in a very simple and lucid manner. Wherever required, the proposed bill has moved parts of earlier chapter to rules for ease of reading and better comprehension.
Ma'am, how will the change reduce the compliance burden on individual salaried taxpayers?
The review of the existing Act started as a comprehensive process in the month of September 2024, and the subcommittee proposed some changes also in the existing provisions like taxability of perquisites, certain perquisites for specified employees. The proposed bill sought to increase the limits for that. So they have been accepted by the government, and the finance bill has brought in those amendments. The finance bill 2025 has also increased the threshold for filing of return of income. The limits for rebates and reliefs have also been changed. So we can safely hope that these changes would go a long way in reducing the compliance burden on the taxpayer.
Ma'am, what approach has been followed while incorporating this section 10 in the new bill? How has this reduced complexities in the new bill?
As I already stated, section 10 is a drafting challenge. So now it has been decided, and all the provisions related to exemptions have now been redrafted into 6 different schedules. I would give the example. Now section 10 is incorporated in schedule 2 to schedule 7. So schedule 2 contains income which is exempt for everybody, like Sukanya Samriddhi, income under Sukanya Samriddhi account. It is exempt for all of us, like you and me. So they are contained in schedule 2. Schedule 3 contains income exempt for certain eligible persons like members of a HUF or partners of a firm. Schedule 4 contains exempt income of non-residents. Schedule 5 contains exempt income of business trust, REIT, InvIT, sovereign wealth fund, etc. Schedule 6 contains exempt income of IFSC and its units. And Schedule 7 finally contains income exempt for certain persons like PM Care Fund or other such persons. So now they are spread across 6 schedules. All the redundant provisions have been removed, and the tables now contain 3 columns. First column contains exempt income, second column contains exempt person, and third column contains the conditions under which such exemptions are provided.
Sir, the new bill introduces the concept of tax year. Sir, what is this concept? What was the requirement for its introduction in the new bill, sir?
Actually, the concept of tax year is very simple. It is a period of 12 months in the financial year. So it will begin from 1st of April. So this new concept is actually replacing the concept of previous year, which is used in the Income Tax Act 1961. So the previous year was a financial year in which the income was earned. So a total income of a person actually pertained to the previous year. The present bill also discontinues the use of the term assessment year. So the assessment year was another financial year which was next to the previous year. So any notice, any letter, any order which the taxpayer received or the return which he filed actually pertained to the assessment year. So it discontinues with that. So now the tax year actually represents both the previous year and the assessment year combined in the same financial year. So whatever notice or letter or order which the taxpayer will be receiving will pertain to a tax year. Originally, the rate or rates of tax pertain to an assessment year, and the Finance Act would be giving the rate or rates of tax for the assessment year, and the total income pertain to the previous year.
Yes,
Now
sir.
the total income will also pertain to the tax year. The rate or rates of tax will also pertain to the tax year. This is the major change. Any assessment, any notice, any letter, any order which the taxpayer will be receiving or will be carried out, they will pertain to the tax year only, and the income will also pertain to the tax year only, and they are the same financial year.
Brings me to my next question. Will this concept of tax year not conflict with the assessment year, sir?
The bill becomes a law with effect from 1st of April 2026.
Right, sir.
So that means the tax year will be the financial year 26-27. Tax year will be 26-27. Any income which is earned in the financial year 26-27 will pertain to that tax year, and it will be taxed accordingly for the rate or rates which are given by Finance Bill 26. Finance Bill 2026 will give the rates for the tax year, which is 26-27. On the other hand, the assessment year 26-27 will pertain to the previous year 25-26. The income which is earned in the financial year 25-26 will pertain to assessment year 2026-27. So there is a complete difference. The income pertains to financial year 25-26, that will pertain to assessment year 26-27. On the other hand, the tax year 26-27, actually the financial year 26-27, the rates will be provided by Finance Bill. In our case, for assessment year 26-27, the rates have already been proposed by the Finance Bill 2025.
Sir, is there any change in the content of the charging section, and how has it been simplified, sir?
So the charging section in the present Act, Income Tax Act 1961, that, as I have already told you, it relates the total income to the previous year in case of every person. So the previous year is actually the financial year beginning from 1st of April, and the income which I earned during a particular financial year, that is the previous year, that is a separate concept related to the previous year. On the other hand, the rate or rates of tax actually pertain to the assessment year which were given by a central act, in our case the Finance Act, every year. So the rate or rates of tax pertain to the assessment year. The total income of every person pertained to the previous year, and this was the charge. That total income is charged at what rates? The rates which are given for an assessment year. So presently in the new bill, everything pertains to the tax year. The tax year is a financial year, 12-month period beginning from 1st of April. The total income of a person will pertain to that particular tax year, that means that financial year, and the rate or rates of tax will also pertain to the same tax year, which is the same financial year, and any assessment which will be carried out will also pertain to the same tax year. Any return which will be filed will also pertain to the same tax year. So everything is unified.
Yes.
And we believe that because of that, huge amount of simplification will take place. At least in the mind of the taxpayers, it will become very simple. The income which he earns in a financial year is the same tax year. Any notice or any letter or any return which he will be filing, that will pertain to the same tax.
Firstly, our viewers would like to know if there is any change in incidence of taxation or methodology of clubbing in the proposed income tax bill 2025.
Clubbing provisions operate to tax income in the hands of transferor and maintain integrity of the tax slab. and also ensure taxation of income shown in the hands of minor child in most cases. There are no changes in incidence of taxation or methodology of clubbing of income in the new bill. The existing provisions of clubbing of income have been retained in a simplified version. Further, existing exemptions from clubbing have been retained in the income tax bill. For example, cases of irrevocable transfer with adequate compensation, or in case of income of a disabled minor child, or in cases of income of professionally qualified spouse remain under the exemption from clubbing.
So does this mean that all provisions are exactly the same?
I would like to put it this way. The ultimate objective of simplification is that a reasonable man can understand provisions similarly, whether he is a taxpayer or he is a tax professional or he is an authority. As far as legal meaning and intention of provisions are concerned, they broadly remain the same. The bill has simplified the language and removed redundant provisions. Further, certainty has been brought in wherever it was possible by removing ambiguous provisions, which otherwise lead to differing interpretations and hence litigations. Wherever possible, formula has been introduced for ease of understanding and certainty in computation. To give an example, viewers will be happy to find a simple formula in IT bill as against the complicated wordings of explanation 3 to section 64(1) in the IT Act 1961.
Sir, can you please highlight major changes in deeming provisions?
There are no major changes in the deeming provision from section 68 to 69D except for simplification and removal of ambiguity. Section 69B has been split into two parts. The investment part has been merged with section 69, while the asset part has been merged with section 69A. The provisions of section 69D have been made contemporary and explicit by including the term negotiable instrument along with the common usage term hundi to give certainty to the intention of the provision. In order to reduce disputes on rate of taxation and to provide certainty, the linkage to section 115 BBE specifying rates of tax has been included in this chapter itself as a new section.
Sir, does the income tax bill incorporate changes announced in budget 2025 towards capping of carry forward loss in the provision of amalgamation and business reorganization?
Yes, the simplified income tax bill includes all such amended provisions in the Income Tax Act introduced by Budget 2025.
Sir, what are the major snapshots of simplification with reference to Chapter 6A?
Chapter 6A deals with permissible deductions from gross total income to arrive at taxable total income of a taxpayer. Such deductions have been instrumental in directing economic activities towards priority sectors and identified territorial areas in the country and have been propelling economic growth. In simplification exercise of Chapter 6A, proviso and explanations have been integrated into main section. Large and complex sections like section 80C, which is much sought after by individual taxpayers, has been transformed into an easily readable Schedule 15. Profit-linked deductions have been consolidated under Part C of the chapter. For example, exemption provision of section 10AA, often interpreted to be a deduction provision and subject to litigations on this subject matter, has been incorporated under deductions to ensure consistency. Provisions having sunset clauses like section 80IA, 80IB, 80IAB, 80IBA, etc. have been simplified and retained for eligible businesses after incorporating necessary savings and repeals clauses.
Sir, what major restructuring has been done in Section 80C?
Section 80C deductions include deductions on account of, say, life insurance premium, contribution to provident fund, etc. Given that millions of middle-class taxpayers claim deductions under this section, the changes ensure better accessibility and comprehension. Various sums eligible for deduction under Section 80C, which were previously spread throughout the section, have now been transformed into a simplified arrangement of eligible savings instruments in Schedule 15 at one place. The deduction limit has been explicitly stated within the section, while the Schedule 15 provides an easy to understand breakdown of eligible deductions. This simplifies the process for taxpayers, making it organized as well as transparent.
Sir, what changes have been made to Section 80 TTA and 80 TTB?
As per the current provisions, Section 80 TTA and 80 TTB provide deductions on interest earned from savings account. While 80 TTA provides such deductions in general, Section 80 TTB was specific for senior citizens. Now, these sections have now been merged into a single structured provision with clearly defined subsections. The eligibility criteria and deduction limits for different categories of taxpayers are now explicit, reducing the need to refer to multiple sections. This change enhances clarity and ease of use, particularly for senior citizens.
Sir, what are the key takeaways of the new income tax bill when it comes to the chapter on capital gains, sir?
Simplified language. The first and foremost is that we have made the language absolutely simplified. Legal jargon has been simplified to ensure that the provisions are understandable to the common man, making it easier for everyone to grasp the nuances of the law. Shorter sentences, all those big sentences, long sentences have been subdivided into shorter sentences. Complex paragraphs have been reduced to simple language so that a common man with no specialized knowledge of income tax can also understand. We have also removed all the provisos and explanations. We have integrated the provisos. So, instead of listing many provisos, and we have made it either the subsections or the clauses and part of the main section itself. Consolidated explanations, wherever the explanations have been provided in the old act, they have either been clubbed together in section 2 or put it at the end of the chapter or the section to make it absolutely simplified. Grouping related provisions, so wherever similar provisions were scattered throughout the chapter, they have been regrouped and put under one particular grouping so that a person who is concerned with any particular aspect of capital gains can go to that part of the chapter and understand all the provisions of the act. Elimination of redundancies. So, we have seen that over the years many provisions has lost relevance and have become redundant. So, now what we have done is all those redundant provisions have been removed to make it a simplified text. We have also used tables and formulas wherever possible to make it absolutely simple and in terms of very simple language for understanding of the common man.
Are there any changes to how the capital gains are being taxed in the new income tax bill, sir?
Yeah, because capital gain is one chapter which is applicable to the maximum taxpayers across.
Yes, sir.
So, there has been a concern in the taxpayer community whether there are any changes in the Income Tax Act. Now, let me again emphasize that the idea is of the government is simplification. Last year in the Finance Act 2024, we have reduced the multiple asset classes, the multiple tax rates and made a uniform tax rate of 12.5% on long term capital gain and 20% on short term capital gain. This 12.5% long term capital gain is without indexation. So, now there is only one rate for all asset class, whether it is gold or shares or land or building, there is only one class, there is one taxation rate of 12.5% for long term and 20% for short term capital gain. So, there is absolutely no change in the new act. We have just followed what was there in the earlier act and we have not changed anything.
Also flowing from that question, sir, how are capital gains from the sale of residential property treated under the new in the new bill, sir?
Again, there is no change absolutely. I have already stated we have not changed the rates or the class of assets, it remains the same. For a residential house property, there are basically two sections which deal with the exemptions. So, if you sell a residential house property, there would be capital gain depending on the holding period, either short term or long term capital gain. If it is a long term capital gain, it is taxable at 12.5%, and if you opt for that indexation benefit, which has been given on a public demand in the last year, then it will be with indexation 20%. That is the taxation part. But there is an exemption given in the provisions of the Act that if you sell a residential property and buy another residential property, of course subject to certain conditions which are laid down in the Act, then you can get exemption from the capital gains which you are supposed to pay on the selling of the house. This is section 54. So, if you sell a residential property and invest in the other property, you may not be taxable on the capital gains if you invest in a residential house. If you sell any other asset class other than of course land and building, then you are allowed exemption under section 54F. Therein, if you invest in a residential house property, you may be eligible for certain exemptions from the capital gains tax, subject to of course certain conditions laid down in the provisions of the Act. So, these are the exemption provisions, beneficial provisions by which a taxpayer can reduce the tax liability by planning his investments in a particular way. We have also seen that world over there are exemptions on the house property being bought by a taxpayer. So, we also continue with those provisions in India.
Would be regarding cryptocurrencies, whether the new act modifies the tax treatment of income gained from cryptocurrencies?
Not at all. We continue to have the same tax treatment for the cryptocurrencies as well, but in the finance bill of 2024, 25, which is produced in the parliament, we have defined as to what exactly the cryptocurrency means. That has also been incorporated in the new act. So, that the definition part has been incorporated, is also already there before the parliament, pending before the parliament. So, as far as the new bill of 2025 is concerned, there is absolutely no change whatsoever in cryptocurrency as well.
Would like to know the highlights of the simplification made in TDS TCS provisions.
Chapter 19 of the proposed bill, it deals with collection and recovery of taxes, and it corresponds to Chapter 17 of our existing Income Tax Act. Part A of the chapter, it has provisions related to payment of taxes by way of TDS, TCS, advance tax payment, direct payment, credit of taxes, etc. In the existing Act, the TDS provisions and TCS provisions were placed in Part B and Part BB respectively. In the proposed bill, these provisions have been merged into one part, that is Part B. This part contains all provisions related to TDS, TCS, filing of statements, their processing, consequences of default, etc. Now, in the existing Act, there are 43 sections which specify various sums which are liable for TDS. It depends on the status of the payer or payee. So, in the proposed bill, all these sections have been clubbed into one section, namely section 393. This section of the proposed bill contains 3 tables applicable to different types of payees, that is residents, non-residents, or any persons, which means residents and non-residents both. The respective table for each category in turn specifies the nature of income or sum, monetary threshold limit, payer, and the applicable rate of TDS. In the table for the resident payee, a similar nature of sums have been clubbed together, such as commission, rent, interest, income from capital market, etc. Further, a separate table has also been provided in the section which deals with cases or conditions where TDS is not required to be deducted. Similarly, the provisions of TCS have been merged and placed into one section, that is section 394. This section also contains one table which specifies the nature of receipts, monetary thresholds, TCS rate, etc. The said section also lays down the conditions for non-collection of tax. Also, provisions relating to the following matters which were scattered throughout the chapter in the existing Act have been merged and placed together as independent sections in the proposed bill, such as certificates including lower deduction or collection certificates, compliance and reporting including filing of statements, processing of statements, consequences of failure to deduct or collect, or pay the tax deducted or collected, and chapter specific definitions.
Ma'am, what is the extent of reduction in terms of number of sections and number of words?
As I told you earlier, Pratibha, that in the existing Act of 1961, TDS and TCS provisions are in Chapter 17 in Part A, Part B and Part BB, consisting of 69 sections. In comparison, in the proposed bill, these provisions related to TDS TCS are in 13 sections only, that is section 390 to 402, as against 27,452 words in these TDS TCS provisions in the existing Income Tax Act 1961. The proposed bill contains only 14,675 words. Therefore, there is a total reduction of 12,777 words achieved in provisions relating to TDS TCS, translating to a reduction of more than 46% of the original word count.
Ma'am, how many rates of TDS have been prescribed in the proposed bill?
Pratibha, the existing Act provides for 6 TDS rates applicable on sums paid to residents, excluding payments on account of salary or winnings. That is 0.1%, 1, 2, 10, 25 and 30%. In comparison, the proposed bill has rationalized the TDS rates applicable on such sums, which is again excluding salary and winnings, into 4 rates akin to 4 GST slabs. So that is only 0.1%, 1, 2 and 10%.
Ma'am, could you please give an example where any significant reduction of TDS rates has been proposed?
Yes, Pratibha. Section 194 LBC of the existing Act, it provides for deduction of TDS on income in respect of investment in securitization trust at the rate of 25% if the payee is individual or HUF, or at the rate of 30% for others. In the proposed bill, these rates have been reduced to 10% only, owing to the fact that this is a well-regulated and sufficiently organized sector.
Ma'am, how many rates of TCS have been prescribed in the proposed bill?
The existing Act provides for 7 TCS rates applicable on various sums, that is 0.1, 0.5, 1, 2, 2.5, 5 and 20%. In the proposed bill, the TCS rates have been rationalized into 4 rates only, 1%, 2%, 5% and 20%.
Ma'am, could you please clarify with examples whether any changes have been made to the monetary thresholds applicable for TDS on various payments?
In the existing Act, except for salary payments or cash withdrawals, the prescribed monetary threshold limits vary from Rs 2,500 to 50,000 transaction-wise, and from 15,000 to 50 lakh annual aggregate. Now, some of these existing limits were prescribed way back in 1975, 2010, 2013, etc. Now, these limits have been revisited and rationalized into 8 monetary thresholds, that is 2,500, 10,000, 20,000, 30,000, 50,000, 1 lakh, 5 lakh and 50 lakh. Some of the examples of the changes in monetary threshold limit. For interest in securities, the limit has been nil right now, which has been changed to 10,000. For interest other than securities, for senior citizens, the limit from 50,000 has been increased to 1 lakh. For others, from 40,000 to 50,000. Similarly, for dividend, for payment to individual shareholders, the limit was 5,000, which has been raised to 10,000. In respect of winnings, the limit was of 10,000 was an aggregate threshold. It has been made as 10,000 as transaction-based, single transaction-based threshold. Similarly, for commission, the limit was 15,000, which has been raised to 20,000. For rent, it had been 2,40,000 a year, has been made 50,000 a month, which translates to 6 lakh a year. For fees for professional service, 30,000 limit has been raised to 50,000. For enhanced compensation, the limit of 2.5 lakh has been raised to 5 lakhs. Similarly, the changes have been made.
Ma'am, what specific measures have been taken towards ease of doing business and reducing the compliance burden?
Pratibha, in this proposed bill, besides the rationalization of rates and threshold limits as we discussed, several other measures have been taken to reduce the compliance burden on the tax deductors, collectors or taxpayers, and also to facilitate the ease of doing business. Some instance that I can point out is, currently if the aggregate annual purchase exceeds rupees 50 lakhs during the year, Section 194Q of the existing Act provides for TDS at the rate of 0.1% by the purchaser. Alternatively, Section 206C1H of the existing Acts provides for collection of TCS at the rate of 0.1% on such purchases. Now, for the ease of doing business and for the convenience of both purchasers and sellers, the TCS provision on purchases has been removed in the proposed bill. Now, there is only TDS on purchases. Further, there is another very positive step taken by doing away with TCS on amounts remitted out of loan from any financial institution for educational purpose. The threshold limit for TCS on other remittances has also been raised to 10 lakhs from the existing 7 lakhs. Another one is, in the existing Act, there were higher TDS or TCS rates prescribed in case of non-filers of income tax returns. Also, the applicable monetary threshold limit for TDS on cash withdrawal was much lower in case of non-filers. Ascertaining the filing status before deduction or collection of tax was causing inconvenience to the taxpayers. Therefore, in the proposed bill, the TDS or TCS provisions related to non-filers have been removed. Another significant step is, in the existing Act, the benefit of lower or nil TDS or TCS certificate is restricted to specific payments or receipts. The proposed bill broadens the provision, enabling a person to seek a lower deduction or collection certificate for all types of payments or receipts or transactions. I would also like to explain that for the benefit of the deductors, that nil deduction has been removed as lower includes nil.
We would like to know that what is the meaning of the non-profit organizations. Has this word been used in the present Act, sir?
एक्चुअली नॉन प्रॉफिट ऑर्गेनाइजेशन हम लोगों के लिए बहुत ही एक इम्पोर्टेंट सेक्टर है और बहुत सारे इसमें ट्रस्ट इंस्टीट्यूशंस आते हैं जैसे एजुकेशनल इंस्टीट्यूशन, मंदिर, मस्जिद. सो इनके लिए हम लोगों का एक विचार था कि सिंपल हम लोग प्रोविजंस लेकर आएँ. So right now the present act does not use a single term for them. They use different terms like trust institution in section 1112 and in section 1023C different terms like educational institution, hospital, etc. have been used. So this bill proposes to use a single term registered non-profit organization for all these institutions.
Where are the provisions related to these non-profit organizations contained in the present Income Tax Act?
Yeah, so there has been a lot of confusion over this. In fact, these provisions are scattered across 5 different chapters. So to start with, the first chapter is the chapter related to definitions. There is a definition of charitable activities in section 215 of that chapter. Then we have substantive provisions scattered across chapter 3, wherein there is section 1023C, then 11, 12, 12A, 12AA, 12AB. So there are so many provisions. There is section 13 also providing that certain incomes are not eligible for exemption. And then we have certain provisions contained in chapter 6A, wherein section 80G and approval for that purpose is contained. Then we have like certain provisions 115 BBI and BBC, which contain provisions related to specified income, anonymous donation, and also exit tax. So presently all these provisions are scattered across. That is why taxpayers sometimes find it difficult to comprehend and correlate all these provisions.
What was the approach that was followed by the drafting committee while redrafting these particular provisions, sir?
So that's a very interesting question, and that takes me back to this entire exercise, the day one of this entire exercise. So when we started drafting these provisions, the first thought which came to our mind, why to have these provisions scattered across so many chapters? Why not to bring all the provisions at one single place? And that was the thought with which this entire process started. So all the provisions have now been brought to one single chapter, 17B, and like this chapter is also structured. It is divided into 7 different subparts. So first part is related to registration, wherein all the provisions relating to registration are contained, like when application is to be filed in different scenarios, when registration is to be granted, for what period registration is to be granted. Then there are also provisions relating to switching over of regime, like if some taxpayer wants to switch over from non-profit organization regime to say present section 10 regime, or vice versa. Those provisions are also contained in that particular subpart. Then we have provisions relating to income of registered NPO. Generally, income of registered NPO is not chargeable to tax, but there are certain situations in which, in case of certain violations, income would be chargeable to tax. So all those provisions are contained in that part, including the provisions relating to accumulation of income and like investment of that income. Then we have the next part wherein we have provisions relating to commercial activities. Then we have another part relating to all the compliances to be made by registered NPOs, say for example filing of return of income or getting audit done and all those things. Then we have a particular part dedicated to violations. In case of violation, what are different violations which may be committed by NPOs, and in case of violation, what are the consequences? Those are contained in that particular part. Then we have two very small parts, one relating to 80G, present 80G corresponding approval, which also has been taken to NPO chapter, and we have one small part relating to interpretations of different terms used in this part.
Thank you. Sir, could you throw light on how many words have actually been reduced as a part of this simplification exercise when it comes to this chapter on non-profit organizations?
So our primary purpose was to give clarity, bring clarity and make the provisions more structured. Nevertheless, this was also in our mind that number of words should be reduced because more words and more confusion is there. So as a result of this exercise, around 12,800 words have been reduced to 7,600 words.
Of our viewers is that will the already registered non-profit organizations be again required to get registered under the provisions of the new bill, sir?
Yeah, thank you Shatrupa. It's a very relevant question. And in fact, ये बहुत सारे ट्रस्ट के माइंड में आना ये प्रश्न बहुत स्वाभाविक है कि अभी तो हमने रजिस्ट्रेशन कराया था, अब फिर से क्या हमें इनकम टैक्स डिपार्टमेंट के चक्कर काटने होंगे रजिस्ट्रेशन के लिए? ऐसा बिल्कुल भी नहीं है। जो भी ट्रस्ट और इंस्टीट्यूशन ऑलरेडी रजिस्टर्ड हैं, चाहे वो 12AB में रजिस्टर्ड हो या 1023C में रजिस्टर्ड हो, उनका रजिस्ट्रेशन नए बिल में प्रोटेक्ट किया गया है। सो द टर्म रजिस्टर्ड NPO हैज़ बीन डिफाइंड टू इंक्लूड ऑल दोज trust institution which are registered in section 12A, 12AA, 12AB, 1023C of the Act, if they have a valid registration and that registration has not been cancelled. So for the time they have a valid registration, they need not apply. Once their registration is about to expire, as per the provisions of the Act or the bill, they will need to apply again.
सर, एक जो सेक्शन 332 ऑफ द प्रपोज्ड एक्ट है जो कि कंडीशंस ऑफ एलिजिबिलिटी प्रोवाइड करता है, सर विल इट अफेक्ट और इम्पैक्ट द certain trusts adversely, sir?
Yeah, thank you Shatrupa. Again a very relevant question. So ये चीज़ भी लोगों के कुछ ट्रस्ट के माइंड में स्वाभाविक है, आ सकती है कि पहले तो ऐसा कुछ प्रोवाइडेड नहीं था कि कौन लोग एलिजिबल हैं रजिस्ट्रेशन के लिए, और अब ये बिल में कुछ ऐसी कैटेगरीज ऑफ पर्सन्स दिए गए हैं कि ये लोग एलिजिबल हैं। सो कहीं ऐसा तो नहीं कि हम लोग इनएलिजिबल हो जाएंगे या कुछ लोग इनएलिजिबल हो जाएंगे, ऐसा बिल्कुल भी नहीं है। इनफैक्ट ये जो एलिजिबिलिटी बिल में दी गई है इसका एक बहुत स्पेसिफिक रीज़न है। एक सेक्शन 11(7) है इनकम टैक्स एक्ट में, प्रेजेंट इनकम टैक्स एक्ट में, जिसके कोरस्पॉन्डिंग हमारा क्लॉज 333 है इन दिस बिल। तो उस क्लॉज में वो क्लॉज प्रोवाइड करती है कि जो ट्रस्ट और इंस्टीट्यूशन अभी प्रेजेंट 11 एंड 12 में रजिस्टर्ड हैं, वो सेक्शन 10 की डिफरेंट क्लॉजेस जैसे सेक्शन 10, 46, 46A उसमें स्विच ओवर कर सकते हैं और वापस इधर आ सकते हैं इस रिजीम में। सो अभी जो प्रेजेंट एक्ट के प्रोविज़न है उसमें ये बहुत क्लियरली प्रोवाइडेड नहीं था कि ये लोग जब वापस आएंगे तो क्या वो एलिजिबल हैं कि नहीं। सो इस कन्फ्यूज़न को हटाने के लिए, उसको दूर करने के लिए वी हैव स्पेसिफिकली प्रोवाइडेड दैट ऑल दीज कैटेगरी ऑफ पर्सन्स आर एलिजिबल फॉर रजिस्ट्रेशन, एंड वी हैव ऑल्सो एडिड ए न्यू कैटेगरी दैट एनी अदर person which may be notified by board. So if any person is left from these categories and board considers that need to be included, then board will have a right to notify such category of persons also.
Can you provide an example as to how the provisions in the new bill will help improve the readability of this particular chapter, sir?
Basically, if you see the entire scheme of the new provisions, it is based on tables and also doing away with the explanations and provisos.
जी sir.
So if you look at the first section itself, section 332 of the proposed act, it contains provisions relating to registration. So the table contains like when a person needs to apply, what is the time limit for filing an application, and then what is the time limit for the Commissioner of Income Tax to decide on that application, and also the period for which registration is to be granted. So there are 7 different scenarios in which all these 3 time limits operate. So now if any trust or institution looks at that particular table, it can immediately get to know as to when I need to apply, within what time I will get the registration, and for what period I will get the registration. Presently, these provisions were scattered across sections, like say for example 12A1 AC that provided the time limits for filing the application. Then section 12AB contained the time limit for CIT to decide. And then 12A subsection 2 that contained the period for which the registration will be valid. So now if you see all these provisions have now been contained in a single table. So if for example I am a registered non-profit organization and I need to apply say after 5 years or 10 years of my validity of registration, and I look at the table and I get to know within what period I need to apply and when will I get the valid registration and for what period it will be valid. So this is how the bill intends to simplify.
There is a dedicated section in the new bill that is talking about taxability of income from the registered non-profit organization. Sir, is there any additional tax that is proposed to be levied on the income of these registered non-profit organizations?
Yeah, that's again a very valid question. So we need to understand the structure of this particular part relating to registered non-profit organizations. So what we have basically done right now, the provisions relating to taxability of their income, NPO's income, were scattered across different provisions. Say for example, present section 1310 provided taxability of their income in some particular scenarios, like suppose there is a delay in filing return of income, then section 1310 provided that their net income will be taxable. Similarly, 115 BBC provided that anonymous donations received by certain say charitable organizations will be chargeable to tax at the rate of 30%. Similarly, 115 BBI provided that their specified income will be taxable at the rate of 30%. So now what this provision relating to taxability of registered NPO seeks to do, it seeks to bring all these taxability together in a single provision. Generally, if a registered NPO applies 85% of its income for charitable or religious purpose, for whatever purpose it has been created, then nothing is taxable. And if there is no violation, nothing is taxable. Similarly, now the bill provides 2 concepts. One is regular income, other is taxable regular income. So regular income is broadly the receipt of registered NPO, and taxable regular income is nil if 85% of that regular income is either applied or accumulated. So it is corresponding to section 11(1)(a) and 11(1)(b) of the present act. So if a registered NPO applies 85% of its income, and if it is not able to apply, if it accumulates as per the provisions of the act, then nothing is taxable. So only income which is a result of violation would be taxable as per the provisions of the bill. There is no change at all with the present provisions of the act.
What is the concept of specified income, and does it propose to tax any new income of the registered NPOs, sir?
The underlying philosophy of this entire exercise was to bring the similar things together. So that is what this concept of specified income also tries to do. Right now, the provisions relating to taxability of say anonymous donations were contained in 115 BBC. Provisions relating to like taxability of specified income were contained in 115 BBI. And there were also some other provisions relating to taxability of NPOs at different places, lying at different places. So now this concept section pertaining to specified income brings all them together and provides taxability of that income. And Shatrupa,
Yes,
one more
sir.
thing, it also provides the tax year in which that income will be taxable, because right now the way it was written, sometimes NPOs were understanding that yes, this income will be taxable, but sometimes they were confused as to the tax year in which this income will be taxable. So now this provision specifically provides the year also, tax year also, in which it will be taxable.
ये simplification का कोई और example सर आप हमारे दर्शकों को बता सकते हैं?
Yeah, एक जैसे इसमें बहुत सिंपल सा एग्जांपल है, जब हम बात करते हैं, मतलब से आप किसी भी एनपीओ से बात करेंगे,
जी सर।
सो पहला प्रश्न उसके माइंड में आता है कि 85% तो अप्लाई करना है, बट ये एप्लीकेशन है क्या, है ना। तो वो सब लोगों को कंफ्यूजन होता है। इनफैक्ट आप अगर हमारे देखेंगे फील्ड में भी बहुत सारे ऑफिसर्स हैं, कई बार उनका भी ये प्रश्न आता रहता है कि भाई हाँ एप्लीकेशन क्या है, क्योंकि एप्लीकेशन अगर आप देखें ट्रस्ट के केस में, ये हमारा जो नॉर्मल एक्सपेंडिचर होता है बिजनेस में, उससे काफ़ी डिफरेंट है ये कॉन्सेप्ट।
हाँ।
सो जैसे इसमें एक बहुत की डिफरेंस है कि यहाँ पर कैपिटल और रेवेन्यू का डिफरेंस नहीं है, एप्लीकेशन में भी कैपिटल एज वेल एज रेवेन्यू। सो जो एप्लीकेशन का कॉन्सेप्ट इवोल्व हुआ से सेक्शन 11 प्राइम ऑफ एसआई ये सारे इस प्रोविजंस को कंटेन करता है। तो सेक्शन 11 में ये सारे प्रोविजंस डिफरेंट एक्सप्लेनेशन, प्रोवाइजो, इन सब फॉर्म्स में पड़े हुए थे। सो अलग अलग जैसे समय के साथ लॉ इवोल्व हुआ तो एक एक्सप्लेनेशन ऐड हो गई, फिर एक्सप्लेनेशन में प्रोवाइजोज ऐड हो गए, फिर प्रोवाइजोज में एक्सप्लेनेशन ऐड हो गई। सो इट वाज बिकमिंग ए बिट कॉम्प्लेक्स। So what this new bill tries, it proposes to assimilate all the provisions relating to application of income together at one place. Right. So now, like if you just read at one particular clause of the bill, which contains this application provisions, so it says it tells about the eligibility of application. What are the conditions required to be satisfied. It also contains provisions like suppose some trust applies out of corpus and then replenishes, then in which year that replenishment will be allowed as application. So all the provisions relating to applications are now provided at one place. So any small NPO can now go through the provisions and understand what will qualify as application and what will not qualify as application.
Sir, also the provisions related to the deemed application have been done away with in the new bill, sir. Yes. Sir, what was the rationale behind that, sir?
As we discussed that अगर कोई ट्रस्ट मीनिंग रजिस्टर्ड एनपीओ अगर 85% ऑफ अपनी ड्यूरिंग द ईयर जो इनकम है उसको अप्लाई कर देता है तो उस पर टैक्सेबिलिटी नहीं आती है, सब्जेक्ट टू अगर कोई वायलेशन नहीं है। अगर कोई ट्रस्ट 85% अपनी इनकम को अप्लाई नहीं कर पाता है तो उसके पास प्रेजेंट एक्ट में दो पॉसिबिलिटीज़ थी, या तो वो अपनी इनकम को एक्यूमुलेट कर सकता है 11(2) के हिसाब से 5 साल के लिए, या एक हमारा इसमें एक्सप्लेनेशन 1(2)(11)(1) में था जो कहता है कि आप 1 साल के लिए, जनरली 1 साल के लिए अपनी इनकम को एक्यूमुलेट कर सकते हैं, जिसको उसने डीम्ड एप्लीकेशन वर्ड यूज़ किया था जिसके लिए। अब बहुत सारे ट्रस्ट इसमें कंफ्यूज हो जाते थे क्योंकि डीम्ड एप्लीकेशन के लिए फॉर्म 9A है, एक्यूमुलेशन के लिए फॉर्म 10 है। अब जब आप 5 साल के लिए एक्यूमुलेशन अपना किसी भी अपने ऑब्जेक्ट के लिए 5 साल के लिए एक्यूमुलेशन कर सकते हैं, सो डीम्ड एप्लीकेशन पर से जो प्रोविजन था इट वाज रिडंडेंट। एंड अगर आप इनकम टैक्स रिटर्न को भी देखें सो देवर 2 सेपरेट शेड्यूल्स for these two accumulation and deemed application. Sometimes taxpayers and small NPOs who are not having that expert advice used to accumulate, say, as per the provisions of meaning section 11(1) explanation 1(2), and used to file that particular in a different schedule for 11(2). So their claim used to get rejected in CPC. So, meaning it was seen that this duplicacy was creating a lot of conflict and confusion and resulting in difficulties to the taxpayers.
Right, sir.
So, this 5-year accumulation provision has been incorporated in the new bill, and it provides that there is no restriction on the purpose for which you can accumulate. The trust can accumulate for any of its objects. So, that is why this is to ease the compliance and help the taxpayer.
Sir, what are the changes that have taken place in the new income tax bill, sir, regarding the chapter on profits and gains of business and profession?
Now, as you know, income from business, profits and gains from business and profession, this is one of the most important provisions in the Income Tax Act. We get bulk of our revenue collection from business and profession. So, one can't undermine the importance of this chapter, and we have taken this chapter with all the seriousness to simplify the provisions. To begin with, the income from business and profession, it is we calculate it under the Indian Income Tax Act under the adjustment method, where we start with the profit or loss as per profit and loss account, and thereafter we make adjustments for certain incomes which the taxpayer may not have included in the profit and loss account. For example, non-compete fee, or say duty drawback, the assessee may not have taken it in the profit and loss account. So that will add back. And therefore, certain expenses which the assessee may not have claimed, that also we allow, even if it is not claimed in the profit and loss account under section 37 or under various sections kept in the Income Tax Act. So we have not tampered with this basic structure of adjustment method of computation of profit and loss account for profits and gains of business and profession. What has changed? I mean, we have, there are a large number of redundant provisions in the Act. Those provisions we have removed. We have introduced a lot of tables, some tables and formulas, which has made the understanding much easier. A lot of complex provisions have been explained through EG means in this way. And some sections which were have been merged. The flow of sections have been streamlined. Likewise, like kind of character of sections or provisions have been put together. So overall, it has resulted in a large reduction of number of words. The number of words in the current profits and gains of business and profession chapter is around 25,000, while in the 1961 Act, the current Act, it is more than 50,000 words. Yes, so, and so also the number of sections has reduced from 65 to 41. So that is almost 40% reduction in number of sections.
Sir, we have noticed that the order of sections within the chapter on profits and gains of business and profession has been rearranged. Sir, what prompted this change and how does it affect the overall structure of the chapter, sir?
Over the last 60 years, when a lot of changes have been made in the Income Tax Act and in the profits and gains of business and profession chapter, so a lot of sections got added and many sections got deleted. As a result, sometimes you will find that expenditure of similar nature are not at one place. So what we have tried to bring provisions which deal with similar kind of disallowance or where the theme is same. We have tried to put it together. For example, 43B, which deals with deduction on actual payment, that is far away from deduction for other expenditure, which is contained in section 37 or 40 capital A or section 40. So we have tried to bring section 43B close to where other deductions of expenditure are mentioned. Similarly, there are expenditures where the entire amount of capital expenditure incurred is allowed in the first year itself. For example, expenditure on scientific research, then investment linked deductions like 35 AD, then skill development project expenditure and agricultural extension project expenditure. These expenditure are of similar nature in the sense that capital expenditure is allowed upfront. These have been grouped together. We have done similar kind of thing, the definition section which was there in between, that has been put in the end. So this creates a much better flow and it is much easier for a taxpayer to understand the provisions of profits and gains of business and profession, and therefore it simplifies the Act.
Yes. Sir, have there been significant changes in the provisions pertaining to deductions related to employee welfare, sir? Has there been any change, and if yes, sir, could you take us through those changes, sir?
These provisions related to contribution to provident fund, gratuity fund, superannuation fund, it used to be like very difficult to comprehend, and our teacher would ask where all these provisions are there in the Act, and then we'll try to identify. So currently if you see, these provisions are spread over 40A7, 40A9, 3614, 3614A, 5A, and then there is a 43B also, and then there is charging section. So a taxpayer, when he is thinking that, look, what are the provisions for contribution to the provident fund or gratuity fund, there is likelihood that he will miss some of the sections and he will not be aware of all the provisions. So what we have tried to do, we have tried to put all these sections at one place, so that the taxpayer doesn't miss it. He knows that if there is employee's contribution, he must deposit it before the due date as per the relevant Act. Then only he will get a deduction. So that way, we hope that there will be better compliance, better understanding, and there will be less litigation.
Sir, could you explain how these provisions regarding deduction on bad debt and provision for bad and doubtful debt have been dealt with in the new bill vis-a-vis the previous Act, sir?
So जो हमारा जो नया बिल है in the new bill, we have tried to bring all these provisions together. In the current act, Income Tax Act, the provision for bad and doubtful debts, they are in section 36(1)(7)(I), then 7(I)(A), and section 36(2). Now, if you want to know what are the conditions, you have to navigate through these sections. And between 36(1)(7) and 36(2), in between there are 10 different clauses which have come, which has nothing to do with bad and doubtful debts. So again, that creates a doubt in the mind of the taxpayer that what are the conditions, how would he get to know them, and we have tried to put all these provisions at one place. And also this provision for bad and doubtful debts, these provisions in the current act, they had become little bit complicated in the sense there were 10 clauses or subsections, there are 6 provisos and 4 explanations. Now we have removed all the provisos and all the explanation, we have put it in the forms of subsections or clauses. So you can see all at one place. And also for banks and financial institutions, we have made a table. In the table you can see that in a bird's eye view that what are the conditions, what percentage of provision for doubtful debts are allowable. So again, this simplifies the whole provision related to bad and doubtful debts.
थैंक यू सर. सर अगर हम डिडक्शन फॉर डेप्रिसिएशन की बात करें तो सर डिफरेंस क्या है जो पहले एक्ट में सेक्शन 32 में एंड नए बिल के सेक्शन 33 में सर?
So deduction for depreciation over a period of last 60 years, again this provision had also become slightly complex. जो हमारा existing act है उसमें there are 6 subsections, 8 provisos and 6 explanations. And again we have removed all the provisos, all the explanations, and the provisions have been sequentially arranged, and the number of word counts, they have been reduced by 40%. So the depreciation provisions now, they read much better, you can understand them much better, and the scope for interpretation and confusion has been reduced a lot. At the same time, we have retained the rate of depreciation, we have not tinkered with the method of allowance of depreciation, that is straight line method or WDB method, that we have not disturbed, and what is the eligibility condition for depreciation, that also we have not disturbed.
Sir, since you spoke about the WDB, sir, it's in fact my next question. So what are the changes in the definitions of actual cost and written down value? Sir, could you explain what these changes entail and their potential impact, sir?
So, again, for written down value and actual cost, over a period of time to cater to various situations and various case laws, we have added a number of explanations. As a result, the entire provision had become again slightly difficult to understand and difficult to read. What we have done, we have introduced tables for different explanations, and also we have used formula to explain what will be the written down value. So that makes the whole concept very, very clear if you go through the draft. The definition of written down value and actual cost is much simpler to understand and to read.
Sir, coming to my next question regarding the provisions related to expenditure in scientific research, sir. Sir, what does the new bill say about them, sir?
So, Satrupa ji, साइंटिफिक रिसर्च एक्सपेंडिचर एक बहुत इम्पॉर्टेंट एक्सपेंडिचर है बिजनेसेस को इंसेंटिवाइज करने के लिए कि वो साइंटिफिक रिसर्च पे खर्च करें, और हमने जो एग्जिस्टिंग प्रोविज़न है 100% डिडक्शन ऑफ कैपिटल एक्सपेंडिचर वो हमने रखा है अभी भी, और उसके अलावा हमने जितने प्रोसीजरल प्रोविजंस हैं उसको हमने कोशिश किया कि हम रूल्स में ले जाएं, जैसे किस किस कंडीशंस पे अप्रूवल मिलेगा साइंटिफिक रिसर्च एक्सपेंडिचर का, वो हम रूल्स में लेके गए हैं. इससे क्या हुआ, हमारा सेक्शन काफ़ी डीक्लटर हो गया है और काफ़ी इजी टू अंडरस्टैंड हो गया है.
राइट सर. Sir, Section 43A of the Income Tax Act, which addresses capitalizing the impact of foreign exchange fluctuation. Sir, how is the revised section in the new bill differing from the previous section, sir?
तो अभी जो एक्सपेंडिचर जो है फॉरेन एक्सचेंज का, जो कि कैपिटल एक्सपेंडिचर के नेचर में है, उसमें under the existing provision, if you borrow some money abroad to buy certain asset, और उसमें अगर foreign exchange का fluctuation होता है, तो you're allowed to add or deduct that with your cost of the asset. And the way it is structured now, that is a very lengthy text, and one can say that they are a little bit complex. We have tried to simplify it. We have put a mathematical formula, we have brought a concept of variation in liability, and that you can calculate mathematically, and therefore the scope of interpretation has got reduced, and the section looks much simpler now, and I am sure it will also lead to reduction in litigation, because the formula that itself gives a kind of certainty to the provision.
Right, sir, absolutely, sir. सर कुछ जो प्रोविजंस हैं वो अभी नए बिल में दे हैव बीन शिफ्टेड टू द शेड्यूल सर. सर कुड यू एलैबोरेट ऑन दोज प्रोविजंस एंड सर क्या रैशनल था बिहाइंड दिस शिफ्ट सर?
सो अभी जो हमारा करंट इनकम टैक्स एक्ट है, अगर आप उसको देखें तो जो इंश्योरेंस इंडस्ट्री के प्रोविज़न है, इंश्योरेंस कंपनीज के प्रोविज़न है, उसका सिर्फ इनेबलिंग प्रोविज़न मेन एक्ट में है और द डिटेल्ड प्रोविज़न वो एक शेड्यूल में डाला हुआ है. बट देयर आर मेनी अदर प्रोविजंस इन द एक्ट, like provisions related to site restoration fund, tea development account, coffee development account and rubber development account, which are used by very small number of taxpayers. So we decided, just like the insurance provision, we should shift them to the schedules, and this will lead to decluttering of the main provision. और जो उस सेगमेंट के जो टैक्स पेयर हैं, they can always go and look at the schedule, and for them also compliance will be same. So in effect, the main chapter on business and profession, that becomes decluttered, smaller, easy to understand.
Right, sir. Sir, now my next question is, sir, our viewers would like to know that what is the treatment given to deferred expenditure in the new income tax bill, sir?
Deferred expenditure, as you know, are those expenditure which are allowed over a period of time. Now we analyze that some of these deferred expenditures, they can be put in the form of a table, and the taxpayer, a businessman, he can see in a bird's eye view, okay, these are the expenditure which I will get an allowance over say 5 years or over, let's say, the life of the license in the case of telecom license. So those expenses like expenditure on acquisition of telecom license, and then spectrum fee expenditure, then expenditure on let's say amalgamation and demerger, voluntary retirement schemes expenditure. These expenditures we have put in the form of a table, and the taxpayer can know uphand that over how many years he will be getting to write it off, and those conditions which are there for allowing these deferred revenue expenditures, we have put them in the separate subsections below the table.
Thank you, sir, for that detailed explanation, sir, on deferred expenditure. Sir, now our viewers would definitely be interested to know, sir, regarding presumptive taxation regime. Sir, what is the key changes in the new bill regarding the presumptive taxation provisions for residents and non-residents?
जो presumptive taxation scheme है income tax act में, so this scheme is used by millions of taxpayers in India. A lot of small businessmen and medium-sized businessmen, they use this provision because उनको books of accounts maintain करने की ज़रूरत नहीं होती है अगर इस section से वो comply करते हैं. So if a professional, अगर उसका turnover से कोई डॉक्टर है या कोई चार्टर्ड अकाउंटेंट है, उसका ग्रॉस रिसीट जो है ड्यूरिंग द ईयर 50 लाख तक है, तो ही डजंट नीड टू मेंटेन बुक्स ऑफ अकाउंट्स. वो सिर्फ अपना 50% ऑफ द ग्रॉस रिसीट को ही कैन ऑफर फॉर टैक्सेशन, एंड ही डजंट नीड टू कीप हिज बिल्स एंड वाउचर्स एंड ऑल. सो द होल कंप्लायंस बिकम्स वेरी इजी. एज फार एज डोमेस्टिक टैक्सपेयर, द रेसिडेंट टैक्सपेयर्स आर कंसर्न, there are provisions in 44AD, 44ADA and 44AE, and these these sections provide presumptive tax for different segment of taxpayers. We have tried to put it in a table, when again the taxpayer or income tax practitioner or a chartered accountant, he can see it in a table at one place, कि क्या क्या कंडीशंस हैं प्रिजम्पटिव टैक्स के और क्या रेट लगेगा, किस टर्नओवर तक वो एलिजिबल होगा. ऑल दी थिंग्स यू कैन गेट इन द फॉर्म ऑफ अ टेबल. So again the understanding becomes very easy and the provisions becomes very clearer.
Yes, sir. We really hope that this will lead to a reduction in litigation, sir. Sir, now coming to my last question, sir. Sir, are there any provisions in the chapter profits and gains of business and profession that remain unchanged in the new income tax bill?
So Satrupa ji, while simplifying this chapter, it is not that every section in the act needs to be merged or demerged or table has to be put. So there are many sections where only the language had to be changed. जो long sentences थे उनको हमने short sentence बना दिया, जो redundant provisions थे उनको हटा दिया. मतलब कोई major उसमें कोई फेरबदल नहीं हुआ है. Those sections you can say, for example, section 29 है, देन उसके बाद सेक्शन 35 AD जो इन्वेस्टमेंट लिंक डिडक्शन है उसमें भी हमने लैंग्वेज सिंप्लीफाई किया है. 35E है, 37 है, सेक्शन 41 है विच इज़ रिकैप्चर एक्सपेंडिचर, सेक्शन 42 है, 43AA है, 43B है, 43C, 43CA और 43CB, 43D, 44, 44A, 44AA which is maintenance of books of accounts and 44AB. Then 44C which is related to deduction of head office expenditures, 44DA. These provisions there has not been much change except for language simplification and removal of redundant provisions. There might be some minor changes there.
Right.